Hello, everyone. Hope you're doing well. Welcome to another episode of Casual Friday, brought to you by the FTX app and my raspy, dysfunctional voice. As you know, Don, you and I have discussed this. These crypto events, they tend to be super fun, but also they tend to be whatever virus, bug, sickness is flying around. Crypto is like heaven for these things, right? They tend to be these amazing super spreader type of events, to say the least. It's a consistent theme as any. I feel good. I know I don't sound like it. It's literally just my throat. Everything else is fine. Apologies to my absence for the audience. I think today is the first day where my voice is just about tolerable, or I can use it at least. And I'll never pass up an opportunity to roast you about your trades. So I thought I should show up and
Fuck.
and have a chat. How are you?
Good, good. I mean, I'm just taking it easy, preparing myself to leave for the weekend because I have better plans than watching the market, actually, which, yeah, I'm very excited about.
Sounds very hard to believe. Um, yeah, I mean that sounds fine. I've got the quarterly chart of BTC USD up on the screen, and it's I think the worst quarter in Bitcoin's history, right? In terms of performance, percentage down move, whatever, and it's a big red candle. So as far as listen, I know something about terrible risk to reward decisions. And that's because I came back from New York with this throat infection thing and I didn't even kiss a girl, right? Like, that's a terrible trade. Like, objectively, you don't need to spend too long thinking about it to know that that's a bad idea. So, in terms of being long this market right now, do you want to give us like a position update? What are you thinking, etc.? It's like for me, I mean, the quarterly time frame is like a bit of a meme because it moves so slowly. But obviously, the
Yeah.
fact that it's the worst quarter ever kind of sucks. And if you eyeball the quarterly chart, in terms of where is support, where is candle structure, whatever, as you know, it tends to align closer towards the kind of monthly levels at like 13K, 12K, whatever, like deep into previous cycles, pre bull run levels, right? If you go down to the monthly, it's very much the same picture. You've got the 14K as the highest close of the, like 2018 top, basically. Excuse me. And then kind of 10, 12K as those pre bull run levels as well. And then it's really the weekly time frame where the counter trend bounce thesis is at its most accessible in terms of where the market is right now. And that's predicated on previous cycle all time high slash highest close at around 20K. And there's also the moving average meme, specifically the 200-week moving average, also roughly around that area, with the added proviso that we've now closed below it for 2 weeks in a row, which is kind of rough. I don't think that's happened in the previous times where it's acted as clear support. Like overshooting it is fine, chopping around the level is fine, but like consecutive closes through the level is not something that looks particularly good, and there's not a ton of data in that case either, but it's not like obviously acting as support at the moment. And the final bit I'll note is, did you see the monthly close fuckery going on yesterday? So
Yeah.
like on the 5-15 minute time frame, we had like this mega spike which kind of bled and retraced, and it's currently sitting right on that kind of 19.4 20K prior all-time high level. With all that said, purely on the TA technical type of stuff, what do you think of the higher time frames? Even from the quarterly, monthly, weekly. What's your view on all this type of stuff?
Yeah, I mean, the quarterly is kind of rough. Very much to me looks like the last market we've had, where also like it closed like what, like 14K, and then like the candle opened at 14K and then closed at 7, and then we had pretty much a year of sideways before further down. Um, but I think like using the quarterly is like you said, a little bit of a meme. It's too much, even for me. I just look at it and I'm like, okay, this looks kind of shit or this looks good, but using it for TA purposes, I think is too far zoomed out. I'd much rather use the monthly. And on the monthly, it's the same kind of story, right? Where you have support in the 14K region. Um, so technically speaking, if you want to be super, super conservative, I think that's like a high time frame support to look out for. The thing is, right, and we've talked about this before with altcoins and with a bunch of like in general, like with lower time frame charts, when you have a breakout like this, right, and 14K broke out massively, right? We broke out and then we went from 14K pretty much all the way to 70K, right? Going all the way back to that breakout level and retesting it isn't really bullish, right? Like that's not necessarily something you want to be seeing. It's something like it's still a support, but at that point you expect it to bounce and then actually go further down, in my opinion. Um, so like 14K is kind of a scary level to hit. It doesn't mean it doesn't have to hit, and I'm still gonna bid it if we do go anywhere close to it. But it's a scary level to bid, especially because it opens up the door to just all of this action above 14K being a deviation, right? Because I mean, technically speaking, we've been trending sideways from 2018 to 2020. Then we broke out, and if we now go back to all of those kind of like months of sideways, it's just a really, really bad look. So I'd much prefer to bounce before. But obviously, that's just my preference. Doesn't really mean that the market has to do what I want it to. But yeah, I think the high time frame level is 14K. Um, that said, I think the weekly level that we are at right now is excellent. I think it's pretty much the best you're gonna get without everything going to shit, basically. And with crypto, it's always possible that everything goes to shit. But I think at this stage, we've had massive blowups. We've had a ton of damage, but it's still salvageable, and it starts getting really, really bad. I think if we actually lose 20K on a consistent basis, start trading below it, start heading towards like 14K or lower, especially below 10K is where I see like just it starts feeling and it starts trading like a failed experiment sort of thing. Um, and the case for kind of bidding 20K, in my opinion, is that one, it's very, very obvious support, right? I mean, it's the previous all-time high. That's gonna attract eyes for sure. It's also gonna be defended by people that really care that this just doesn't look like a failed experiment, I guess. A bunch of people took money out of the market at like 60K, 50K, all the way down. I think a bunch of them are probably going to redeploy, but yeah, we'll have to wait and see. Market obviously super, super scared. Um, but yeah, so it's an obvious support level, 20K being the cycle high, the previous one. And then also you have had that accompanied by just pretty much capitulation, right? Forced selling on all fronts into like a level like that, I don't really mind buying. So my thesis hasn't really changed. A bunch of people have been kind of making fun of me on Twitter for it, which I find weird because realistically, like it's pretty much exactly at my entry across the market. Solana is still up, ETH still up a little bit, Bitcoin's down a little bit. Um, which I found interesting. Like every time I get made fun of, I have a little bit more conviction in my trade because historically speaking, when people celebrate my trades, like when I get into a long position, it's the one that I have to cut early because shit doesn't really move. And the ones where I get made fun of, it's usually the ones that work out. But this time around, we obviously have that macro headwind that it scares me, scares pretty much everyone in the market, I feel like. And with the biggest players in the game getting liquidated, it doesn't really make the situation much better. But yeah, I think like just from a technical point of view, it makes a lot of sense to be bullish 20K. If that gets lost, we kind of have to assume it's going to 14 to 12K, that monthly support. And at that point, you're basically just hoping for bear market rallies and you want to see um, a long, long consolidation period or just stocks going back to all-time high, but I don't think that's going to happen anytime soon. So like in that, if it goes that poorly, I think we're fucked for quite a while, which yeah, I mean, it's possible, but I'd rather not see it. So I'm positioned long, or like at least I bought some spot. I'm gonna hold on to that until invalidated or until I feel like selling it. It's not really like when I trade spot, I don't have to have like a iron proof, like foolproof. Okay, this is where I get out because at the end of the day, I can also just keep it as an investment, right? It's the kind of nice thing about spot. Um, where it's like I didn't have a long-term hold position before. I bought a bunch, and if it all goes to shit, I'm still a believer that Bitcoin is gonna go back above 60K. So if I just wait long enough, it's gonna come back to me. So if I feel like prices are too cheap for me to sell, I'm just not going to.
Yeah, turning from trader to investor, one red candle at a time.
Yep.
On the bounce thesis, two things. The first is, what do you think of the 200-week moving average thing? Especially given, I mean, look, the sample size isn't massive by any means, but you mentioned a lot of
Hmm.
eyes glued or directed towards the 20K level. There's probably at least an equal amount of eyes, or it's comparably relevant, that 200-week moving average, which has historically been used as a kind of end of the aggressive bear market selling type of indicator. We're below that on BTC and closed below it. On ETH, we closed below it. It almost looks like a bearish retest into that structure, as we'll type of discuss. So first question, does that play into your analysis at all, that kind of high time frame trend following proxy? And the second one, if you are correct and things start to turn around and, that kind of rounded bottom into a what would be a bear market rally type of scenario, have you done any either adjustment or reflection or just been thinking about targets at all, like where you'd start to take profit on those positions, especially given, the mental capital side of being in those trades isn't like super fun. So where do you see yourself exiting if the market gods print some green ones?
Um, so for like the moving average thing, it's not really too big of a deal for me. I don't really look at them too much. It's a nice confluence to have, but if it kind of goes against what I think the market is going to do, it's not necessarily something that I follow religiously. But I obviously feel much more relaxed if we actually manage to get back above it. I think the funny thing is, like, the moving averages are in an area now that I think if we get back above, it's pretty clear that it's going to go higher, right? So um, they actually offer quite the trade opportunity there. I think if you can catch it, if we kind of start closing back above it, I think you're gonna see a bunch of sideline capital move in, so it's probably gonna go up.
It's the cred confirmation trade, right? The good old meme.
Yeah, yeah, which is not too bad. I think I'm not really like at these kind of extremes. I don't really care too much for like waiting for confirmation when I feel like okay, I have like a good trade, or like a good in general good price. But in this instance, it's actually probably going to turn out better, just based on the fact that one, I started buying like my first half of my buys. I did too early, so my average is not good enough to justify it, like the time spent in the trade. I think. Still, obviously happy with my positioning, but yeah, when you're sitting in a trade for like a week or two or 3 or 4, or this could turn into 2 or 3 months, that's gonna just suck, because if price just darts around your entry all the time, it's really hard to just chill, because you want to look at the market, you want to see how it does, you want to trade it around a little bit, and then you can't just fully relax and just take it easy. But yeah, target wise, I think I'm going to look at the market again in like depth and kind of just look at how strong it is. If we go towards like 28K for Bitcoin, like at that area, I'm gonna reconsider if I want to hold my position or not. It's not necessarily like a target where I want to sell everything, especially with the current price action. I think if we shake off what we've been kind of going through, I don't want to sell 28K probably. But it depends on how we get there. If we, for example, you talked about like that scam action yesterday night, right? If we get that again, but with just a much higher squeeze towards 28K, I'm going to be the first out the door, right? I don't. That's not what I want to be seeing. If we just straight up squeeze or like move into it, because then I think what's going to happen is it's going to squeeze into it and then slow bleed back down. So I'm going to get like a really good secondary entry again. But if we round out here and then walk up towards like 23, 24, and then squeeze, so kind of build a base, I think there's not really a good reason to sell 28. So I'm going to hold on to my stuff and try higher. So like I feel like there's opportunity to go higher. It depends on kind of how it goes. So I'm just going to adjust my views based on that, based on how we trade, based on what comes out. But given how shitty the situation is, right? Like everything just seems to go against us right now. If we can kind of turn that around, I don't think it makes much sense to sell early. I think you want to hold on to those positions and let it run a little bit. And that's what I hope for. But I'm obviously not married to that view. I usually sell more early than late. So I'm probably going to be the guy that sells into resistance and then goes one resistance higher if it goes up at all. But that's fine by me. But in general, like I said, I don't think I want to be selling at first resistance on all of these.
Yeah, especially when it comes to higher time frame stuff. That makes sense. And it's also just even structurally, it's sort of a volume gap type of thing, right? Like up only, you get down only eventually. Down only, when it gets through those clusters, you get up only eventually, right? Especially in crypto, there's pockets of very inefficient one-sided movement, buying or selling. They tend to get filled pretty quickly once the market makes up its mind. And we definitely left a lot of gaps in the weekly trend that we've established thus far.
Yeah, I mean, it's been brutal down only entirely. I mean, this is kind of unprecedented, I feel like, in recent Bitcoin history, where it's just been one sided the entire way down. And we've had one bounce up, and that was by basically Do Kwon saying he's going to buy all the Bitcoin. And that led to like a tiny move up that in the end liquidated everyone, including 3 Arrows Capital. So, I mean, it is quite a brutal situation, and I get why people are scared. And yeah, I mean, everyone has to kind of do whatever they want to in this kind of instance, and like not taking risk is a fine thing to do. I just like to when everything looks like shit, take some risk because for me, every time I've done that, every time the market looked like it's going to zero and it's been kind of edging on that level where it starts looking really, really bad, it's provided at least a bounce, if not more, for me anyway. So, like these kind of setups I take, and most of the time they work out. If this one doesn't work out, I mean, it's going to suck for me, obviously, but I'm fine with that.
Yeah, and look, a useful thought experiment might be like, say the market's trading, before all this price action, before the macro, whatever stuff, at around 60K, right? And then you're talking to your friend, and he says, look, imagine some black swan thing happens and the market collapses, and you're just left with rubble and, TA lines in the sand. Where are the areas where you could do business and not feel bad about it, right? As you and I have discussed at length, that list isn't very long. It's like what, 30K, 20K, 10 to 14K, zero, basically, right? And
Yep.
and everyone would agree with that conclusion if the price were higher. But then price actually gets to those levels, and levels that were previously very attractive, or at least worth poking and prodding at, as we described in Technical Roundup, suddenly become unacceptable, and you're a bulltard if you do business there, etc., etc. Like again,
Yeah.
from a high time frame point of view, the list of areas where you could justify punting isn't very high at all. And so even if you punt and scratch and do whatever else at all of them, you shouldn't feel terribly bad unless crypto turns into a full out blown experiment. And at that point, your patience doesn't mean
Yes.
shit anyway because everything's gone to zero and there's no making it back, right?
Yeah.
So
And the interesting thing is, right, there's always going to be a reason not to buy at every single low. And there's always been good reasons to not buy, right? If you remember back to 2018, the ICO bubble collapsed, retail got completely rinsed. The entire like ecosystem was basically, yeah, this was all a scam. And I mean, like everyone realized there was like the entire ETH thing was basically like just making scams happen. ETH went below $100, and there were good reasons not to buy. Right, you just saw the entire space get blown out. There wasn't really any improvement over the previous years because I mean, at the top back in 2018, Bitcoin didn't work. You had to pay a shitload of money to transact. ETH didn't work. Like I said, ICOs went completely nuts, and a bunch of people just ponzied it up. And then the entire market collapsed, and you had a minor war that collapsed the floor even further. And I mean, those are all really, really good reasons not to buy into it, right? And still, from that price level, Bitcoin went from 3K to 60K, which is 20x, right? Even though there were really, really good reasons not to buy at those levels. And then Corona hit, and it went really, really low. and the market almost went to zero. And I still remember when I was buying, people were like, "Hey, dude, there's only like 20 million or whatever dollars in price between us and like in bids between us and zero, right?" And then people were like, "You should not be buying." And it's like, yeah, there's always going to be a good reason not to be buying. So like that kind of thinking doesn't really get you anywhere. Um, if you're just looking for excuses not to buy. Now, obviously, there's better reasons to not buy and worse reasons to not buy. But I think that kind of mentality is a really, really bad one for a trader to have. Like if you just look for these kind of excuses, because then you're never going to buy the levels that you've actually wanted to buy. Um, because it's really, really easy to kind of make an excuse for yourself, or just to kind of reinterpret the market once it actually hits your levels,
And
in
that
my opinion.
relationship is convex, right? Like as it goes down more towards your levels, the reason it's going down, you're going to have like fresh FUD, if you will, or new
Yes.
information that's bearish. That's only going to reinforce that reasoning. The most recent example being all these big on-chain liquidations. Like those on-chain liquidations will only come up on your radar by definition as price moves lower. So you're getting more information telling you not to buy the levels you wanted to buy as price reaches the levels you wanted to buy in the first place. Do you know what I mean? Like,
Yes.
so it's not the fact that there are always these good reasons, there are always bad reasons, and you kind of just need to mark out your areas and trade your setups. It's the fact that the reasons for not buying where you quote unquote should be buying or plan to, the number of those reasons is only going to go up as you approach those areas, because by definition things are getting worse. And the same works the other way, right? Like say you plan to sell asset at X higher price, there's going to be drivers taking it to that X higher price, and as it goes higher you're going to get extra noise and more information that wasn't there previously, by definition telling you not to sell. So if you kind
Yeah.
of filter for that noise at the end of the day, if you as long as you have that expectation, really the best thing you can do is to just follow your damn plan, trade your setups, manage your risk, and not try to be this omniscient guru that will be able to somehow forecast all the bad stuff that'll be available when you're buying support and all the good stuff that'll be available when you're selling resistance. You just can't do that, right?
Yeah, I totally agree. That's kind of like that's the problem when you're trading in a market that is mainly driven by speculation, right? I mean, we are trading a market that is focused around speculation. A lot of the DeFi stuff is just basically enabling people to gamble better. So it's like the lower prices go, the worse fundamentals actually get. Like it's not even a meme. So like Bitcoin price is down, the fundamentals are worse. It's actually the reality, right? There's less people around. Like all of these projects are going to be used less. So it's like this is all just kind of like gonna compound and compound. And I mean, this is why we have these big moves, because when the market kind of is fueled by speculation and is built around speculation, um, the higher prices go, the more speculation there's going to be. So the more bullish the market is going to look to outsiders. And this is why you had all these big valuations on, I mean, BlockFi, for example. Like, I mean, the crazier the market gets, the more fundamentally bullish it's going to look, and the other way around. And then you kind of have to get through that noise, and it's really, really difficult. And obviously, like if you're buying early in a market that goes down 90% regularly, you're gonna get shit on. But also, if you kind of discount the market that has gone like down 90% and then 50x and then down 90% and then 50x again, I think you're doing a big mistake as well. So it's kind of like it's this double-edged sword. The only reason why we have this volatility, this crazy volatility, is because yeah, the market works like it is.
Yeah, we have fundamentals that are primarily informed by price, right?
Yeah,
And
which is
price that's
hilarious.
primarily informed by momentum. So that just guarantees you reflexivity in both directions. We've written about this at length in Technical Roundup, trletter.com, free weekly newsletter. But it's that kind of thing where it's like price up, users up, volume up, TVL, whatever, up, liquidity up, fundamentals up, and then take that, reverse it, and there's your downtrend in a nutshell, right? Like if you, I don't know if you looked at gas fees for ETH recently, it's a complete ghost town, and that in itself just completely eviscerates probably one of the more compelling bull market narratives we had of layer ones and kind of ETH killers, ETH alternatives, where the basic premise is that there is an outsized demand for block space and the desire to transact on blockchains, which can't currently be met by Ethereum in an economically efficient way. And for that reason, we spin up all these other chains basically to fill that excess demand. But now there's no excess demand, right? You should go do whatever you want on ETH. It costs nothing. And that's what happens when everyone dies and you get that type of ghost town effect. So I mean, I agree. It's very hard to keep your head on, head on straight when that's happening in the moment, because it just looks like adoption at that point, right? Whereas in reality, a lot of the time, it's kind of just very circular speculation of crypto to stablecoin to crypto to stablecoin to crypto to stablecoin, and then someone dies. Basically.
Yep.
I think that's plenty of BTC commentary. The final thing I'll add is, when you mention capitulation or whatever, your Twitter replies, by the way, are complete garbage. It almost makes me want to mute you so I don't have to see you responding to some of the comments you get. But Travis Kling has been writing this kind of monthly highlight thing about key events that take place in the market. And the one for June is insane, right? It's like 3AC blow up, Celsius halts withdrawals, BlockFi goes to zero, Voyager goes to zero, Babel Finance goes to zero, Spot ETF rejected, Compass Mining CEO resignation. What else is there? Some NFT stuff, data leak, whatever. CFTC claims Gemini lied to regulators about giving market maker rebates. DOJ executive order stuff on digital assets. ProShares launches short Bitcoin ETF. It just keeps going. And recently other things like I think Genesis, there was an article in CoinDesk about them having hundreds of millions of dollars in losses. Like the whole space is just absolutely nuts right now. Certainly quite different from the super cycle vision, which was taking force not too long ago. On that note of super cycle, let's talk about ETH. Higher time frame stuff, very unsurprisingly very similar. That the quarterly is horrendous and looks like it's going to zero. The quarterly support is under 1,000 on the monthly time frame. After last night's shenanigans, it did close at, well, depends where you look. It kind of closed below /at/ on top of, or just around is probably the best preposition to use. The highest monthly close support at like 1.1k or thereabouts, although that's being tagged from the underside at the moment. On the weekly time frame, it's a similar type of thing. I mean, it's much, as you'd expect, kind of goes up more than BTC and goes down more than BTC, right? Shocking relationship there. But ETH is currently below its 2017 all-time high, which is at 1,400. And it also looks like it gave a nice kiss to the, not to cred, because that didn't happen, but to the 200-week moving average on the weekly, 200-week moving average on the weekly time frame. That's redundant. But basically, excuse me, same type of metric, where in the past, albeit again less data, not as clear, the 200-week moving average has been like a decent thing to look at for crypto inflection points. ETH is below both its 2017 all-time high level and also below that moving average level, and kind of barely hanging on to the kind of 1,000 round number monthly support, whatever. And I think you and I have spoken in previous technical roundups where I think we said something to the effect of 1,000 is like maybe bounce / shit support. And then the real meaty candlestick one, the kind of BTC 14K equivalent, is between what, like 400 and 700, right? That kind of pre-bear market cluster on the monthly time frame, which would be significantly discounted to where the market is at the moment. Is your view on ETH very basically similar to BTC, like prior cycle-ish, round number-ish? You only have that many levels to buy. This is one of them. If it doesn't work, we all take existential apocalypse longs, 30, 40% down from here.
Yeah, I mean, it's basically Bitcoin tagged 20K, which is basically just the wick of the last cycle, and is chilling around there. And ETH just kind of went all the way back to the close and is chilling around there. I think it's pretty much the same exact thing. So yeah, it's back. Like when you look at the monthly, it's back at prior all-time high. In that area, I think there is a bunch of support. I mean, it just makes sense, I think, to bid that. Obviously, in current market conditions, nothing makes sense, but I think that is like one of the most logical ones. If we lose that, honestly, on the high time frame, I don't even think like 700 is like that good of a support. I think it's like 400 to 200, or like 400 to 300, like that area that we broke out of after the bear market, right? I think that is the area to look at that point, because ETH right? If you look at this, and I'm going to make the same argument, it's basically breaking back into a range ish. It's just a very, very short one. So we've moved after the all-time high in January of 2018. We kind of broke all the way down towards like 400, right? And I had a massive bounce back into the all-time high kind of candle, and broke down further. And then we bounced, found resistance at that 400 level again. And I think that's basically range low now, and we're trading at range high. So if we lose the range high, I think it makes a lot of sense to target range low, which would be 300, 350. I think that would be the death of a shitload of stuff in the space. I mean, if you kind of start thinking about what a move from 60 to 20K did to crypto and what it's all like, what it's killed basically, imagine if ETH just basically retraces the entire move. That'd be much, much worse, I think, especially given that Bitcoin would just kind of lead to massive losses as well, right? Because like if ETH goes down, Bitcoin goes down, and vice versa. So that'd be catastrophic. So I think it makes a lot of sense to kind of bid the last level before that, right? Because if all goes to shit, you can still buy 300 or even cheaper. But if it doesn't go to shit and you didn't buy the prior high, I think you feel like an idiot if you're bullish crypto at all, right? Like, I mean, if you're just a trader, I think you don't necessarily, this is not like a brain that kind of buy. But if you're like bullish crypto in any shape or form, it is just based on the fact that, like, if you think Bitcoin and ETH are going to come back, these are the kind of levels where you absolutely want to have exposure no matter kind of what is going on, right? Like sometimes prices are so low that it's just like, okay, no matter what's happening, I'm more than fine with buying. And I think both of those kind of levels I hit for Bitcoin. It's for Bitcoin and ETH. It's just a question of are we actually going to take this entire space down a complete level, basically erase everything that's been done in it since the bear market of 2018, as essentially just kind of like wiping out everything. I don't think that's gonna, even if it happens, right? I mean, I'm not saying it's not going to. I don't think it's gonna happen quickly because I think like in like a bad case scenario for ETH here in this example, you'd find support at this previous all-time high. You'd bounce, but very weakly and very shallow. You can still make like a few percent here and there. Like it could easily go to 1.6K and then get rejected there. And at that point, you start looking really, really bad, right? Because then you have like this rally, this fake rally that breaks down, and then I think you have like that door open towards like the low prices. But I'd be very, very surprised if it's just a straight line. We've had the straight line the last few weeks. I mean, if we didn't have last week, we would have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We had like 11 red candles, one barely green, and now we're having another one, right? So it's been straight down, and I don't expect that to just copy paste on the right side on previous all-time high kind of levels. Doesn't really make much sense to me, technically speaking. So yeah, it's the same kind of story as for Bitcoin. I have some exposure, and I think it's gonna bounce.
It's a very positive way of looking at things. Like, hey guys, this is the last pre-catastrophe for crypto support level you have. You know, just that phrasing on its own. I think it's accurate, and also just kind of sets the scene, I suppose. And also one thing about following like big public bears or whatever on Twitter is that a lot of them will never buy. I just want to make
Yes.
that very clear. They will never buy. All their targets can hit, they won't buy. Price will go below where they said that it's going to bottom, and they'll find more reasons for it to keep going lower. And then it bounces. They'll say it's a dead cat bounce. It'll break out. They'll say it's it's like a failed breakout deviation or like a bear market rally or whatever. And then you blink, and it's 2-3x times the bottom, and you're none the wiser essentially. And I remember this very fondly with BTC and ETH during the COVID crash and even the 2018 crash, but COVID crash especially, where people were like, "Oh, why would I buy $100 ETH if I can buy it for like $45 next week?" That was a very common sentiment. So hats off to the people who've like completely nailed the trend and have been big public bears, etc. I don't like being big public anything because that's not how I trade, right? I'm super nimble. I generally look for smaller moves. I'm always on the lookout to, you know, interpret and seek out evidence as to why I'm wrong, and therefore, you know, me being big public anything, unless the conviction is through the fucking roof, it would just be a very inauthentic way to communicate like what I do and how I trade on Twitter. And God, after 5 years in this mental asylum, one thing I can't do anymore is be inauthentic on that platform, right? But just to kind of go back, if you've been on the, you know, mercifully on the right side of things or didn't blow up or whatever, whether it's, you know, following me being like I take one trade every 10 years and I haven't taken it yet, haha, good jokes, but like, you know, if that's helped, great. If you've been following other very like more public and louder analysis as to the downside, that's great as well. But just bear in mind, like, unless you don't believe in crypto at all, you have to buy at some point in order to make money, right? Or at least to expose yourself to the highest upside. And the same behavior we talked about earlier, where you move your targets on the way down as the price goes lower, move your targets on the way up as it goes higher, especially if you've got that social media dopamine straight into your veins and infinite engagement or whatever else, a lot of those people will simply just never buy. And so, you know, you use those tools sparingly, is what I'll say on that regard. I agree with your ETH analysis. Nothing too different or special to say for me. I think the technical roundup audience knows for the most part I'm generally a bit more boomer, a bit more conservative. I don't mind a shittier entry if it means like a confirmation trade or a retest trade or having to dip onto a daily time frame for a market structure trade once the higher time frames have resolved favorably, whatever it may be. The earliest I think I'll be able to meaningfully do that is a weekly close back above the 200-week moving average. I don't even think that in itself is some kind of magical level. I just view it in terms of positioning. There's a lot of positioning taking place below that structure on anticipation that it's broken and that the trend, even the higher time frame trend, is completely cooked and this time is different, etc. If those levels get reclaimed, all of that positioning is wrong, and wrong bears end up becoming unwilling bulls, right? And that just pushes the price up. So that would be really the first meaningful momentum trigger to the upside for me on both BTC and ETH. Otherwise, if it chops or does whatever else, fine, you know, I'm going to let it do that. And then, you know, if it nukes, we all take the existential panic longs together. If it's a bit stronger on the weekly time frame, I can definitely dabble and gamble. Everything else has been sort of significantly less interesting to me personally. Do you want to talk about S&P or altcoins? Because look, honestly, I'll be frank with you. I couldn't care less about altcoins at the moment. Like I know Solana's showing relative strength or whatever else, but like in terms of narrative-driven stuff, catalyst-driven stuff, new cycle, you know, Sol, Luna, AVAX, Axie type of returns, I just don't think it's the right environment or landscape for it. And the best performers, God, even maybe the best 2, 3, 5, 10 performers of the next cycle, they're either in their infancy and unavailable, or they don't exist, or it's just something completely unfathomable to us, like non-profile picture NFTs or something ridiculous like that. So I'm not like actively hunting or, you know, chasing these type of things. And there's, you know, the contagion risk we've talked about at length has obviously spilled over to a ton of these altcoins as well, which have their own unlock schedule, but now also just the extra sell pressure from a lot of these firms, with redemptions coming up, getting wiped out and just in a bad state. And I don't want to be that exit liquidity. I don't really care about altcoins all too much. I think if I want to be risk on crypto and I get those bullish signals from BTC and ETH, I'll probably buy like Solana and some other stuff that looks good on a relative basis or has a good chart. But in terms of multi-week or narratively or whatever else, I couldn't care less at the moment. What do you think?
I mean, I'm bullish on a lot of Bitcoin pairs actually. I'm bullish Doge against Bitcoin. I'm bullish Litecoin against Bitcoin. I'm bullish Solana against Bitcoin. And there's a bunch more, but I think it doesn't really make much sense to talk about. The thing is, I think there's a bunch of opportunity to like for some of these altcoins to double or triple against Bitcoin. The question is like, is that like worth the risk? Because like you said, there's gonna be like, if that happens, there's gonna be other altcoins that are gonna come out, or in general just new narratives that come out where you can just be late to the trend and still outperform. But yeah, I like, for people that are looking at altcoins and are wondering what kind of altcoins I like the best, which is like super fucking boomer, but I like Dogecoin, I like Litecoin, and I like Solana. Those are like my three favorite ones. I think there's a bunch there's good bull setups on those, I think, especially on Litecoin and somewhat on Dogecoin. And I'm a big Dogecoin hater, so for me saying that, it's actually quite a bit, like quite a good setup, I think. But um, it hinges on Bitcoin actually not going to shit, which just adds risk to your trade, right? Because if you're trading Bitcoin, it's already quite risky given the entire circumstances right now. And if you're trading an altcoin on top of that, if Bitcoin goes to shit, your altcoin is going to shit. You're going to have less liquidity to exit. It's going to slip more. And you're going to be down 20, 30, 40, 50% in a heartbeat, right? So that's the risk that you take. And it's not necessarily one that you have to take, I think, based on what Cred said, basically that there's going to be new coins, new narratives, if any of this plays out bullishly. So
And to be
yeah,
clear,
but
your altcoin kind of long thesis right now isn't some like narrative, fundamental, whatever type of thing. Just for the benefit of our audience, it's basically
Mhm.
I'm buying coins because I think coins will go up.
Yes,
And
I mean,
if right, like, and then if like specifically with BTC and ETH, I'm buying those, but with Doge, Litecoin, Solana, etc. If my overall market view is correct, they will go up more presumably than BTC, ETH, etc. Hence the relative strength of the Litecoin pairs, of the altcoin Bitcoin pairs, and because they're just in general kind of less liquid, lower market cap, etc. If Bitcoin goes up like 10%, those might go up 20, 30, 50%, right? It's like kind of a
yes,
just an extra beta type of play.
yeah, but I mean, they've actually, and this is kind of interesting, they've actually outperformed on the down, like on the way down as well. So I think in general, these Litecoin, now I'm saying it too, these Bitcoin pair trades have been actually excellent. It's basically how you take them is like you short Bitcoin and you long like an altcoin. It's very, very risky. But they've been playing quite nicely, and I think that's probably going to continue. So I think Dogecoin, Litecoin, and Solana on the Bitcoin pairs are going to outperform pretty much no matter what happens, unless we go down massively on Bitcoin, like kind of 20% a day kind of nukes, which I mean, last time actually didn't take these down at all. But I think it's still like that's not the situation you want to be trading altcoins in. So yeah, it's a risky kind of, like you said, beta play, like higher beta play. Yeah.
Yeah, and for the benefit of our audience, like one of the use cases of leverage isn't just, excuse me, isn't just jamming that thing up to get a bigger position size than you could ordinarily take. One of the main benefits of having such a wide choice when it comes to altcoin linear futures is to be able to take those relative trades or pair trades or whatever you want to call them without kind of exposure to the underlying delta of the market. So, for example, if you think Dogecoin is going to be stronger than Bitcoin, regardless of whether the market goes up or down. You like buy X amount of Dogecoin and sell an equivalent amount of BTC. And then if your thesis is correct, even if crypto goes down, but your idea that Doge is stronger than BTC plays out, you still make money on the trade, even though the underlying market is showing weakness, right? So you isolate the kind of crypto strength and weakness. You take that out of the equation, and you're only trading one asset against the other using linear futures, for example. So that's one of the um, you know main use cases, or I guess more mature use cases when it comes to leverage. Is if you want to just express a relative view of coin A against coin B without expressing a view as to the underlying market itself, or directionally speaking, that's kind of how you do it, right?
Yeah, it's my favorite way to use leverage. That's the only kind of thing that I miss trading leverage, because I think it's the best way to use it. There's often times where you sit around, you're like, yeah, I have no idea where the market is gonna go, but I know exactly which altcoin is gonna perform better than the other one. Um, and I mean that's money right there, right? Like if you know, okay, this altcoin is gonna go up like twice as hard if the market behaves nicely, and it's gonna not go down as much if the market just kind of shits the bed. I mean, that's just free money for the taking. Obviously, there's still risks and all, but those are kind of like the best trades I think to take. It's an area that very, very few people kind of dabble in, because um, it's just much, much more sexy to have like an altcoin, like your bullish altcoins. You just buy 10 altcoins and you hold them, instead of like, okay, you're bullish like three altcoins and you're kind of hedging those 3 altcoins by shorting 3 others that you think are worse. But it's one of the better ways, I think, to kind of manage a portfolio. But it is much, much more complicated. So I think for beginners, it's like a little bit of a tough challenge, but it's something that I used to do a lot and I've really enjoyed it.
My favorite use case for leverage is thinking, if I were 10 times richer, how many coins would I have? And then I just put that number into the interface, and that's it. Suddenly I feel much more valued as a human being. The liquidations email come afterwards, but I've already got my dopamine high at that point, so it really doesn't matter. As far as stuff driving the market, S&P and Nasdaq, something we wrote about in excuse me, we wrote about in Technical Roundup. This is kind of something I've been memeing you for, which is that, Technical Roundup is obviously tongue-in-cheek, the best S&P trading newsletter on the market, except if you'd taken every crypto trade you took on the S&P instead, we'd be doing this from your island somewhere. It's
Yeah.
just when you've correctly, or when we've correctly analyzed the S&P, let's say the argument was going to bounce, or it's going to be a bearish retest or whatever else. On the bearish retests, crypto more or less plays along. On the bounces, it really hasn't been, which speaks to the, I guess, endemic or endogenous strength, weakness rather, of crypto itself, and this extra overhang of supply. But looking at this thing on the S&P, two things make sense, or at least stand out. The first is the monthly close above monthly support at,
Yep.
3,700, 3,710, 3,760. It's not the most amazing level in the world, but it is still a level, right? Capable of producing a bounce. And so the monthly close has been constructive in that regard. I guess the diverging bit of information is on the weekly time frame, where this week it's coming off just this very recent kind of bearish retest on the underside of 3,900 or thereabouts, right?
Yeah.
And I think it's
But I
very
don't think
similar for the
that's
Nasdaq. Sorry, go on.
yeah. I don't think that's too bad, honestly, given like just when you look at the chart, right, on the monthly time frame, there was only really one way that that was gonna close at support, and that would have to be with like a massive red candle on the weekly, right? Like you just like the only way that this could close after like last week at the monthly support where it's right now was by just having this big red weekly candle. So I think it's going to be more interesting how the next week closes. I don't think this rejection this week is too meaningful in the grand scheme of things because it's just basically brought us back to monthly support. So if we have like a strong week next week, that just means that monthly support is doing its job, I think. But yeah, sorry, I kind of interrupted you
No,
there.
no, that makes sense. And then there's also the Nasdaq monthly cluster. It closed within the cluster itself between 11.1 and 12.1, but it did close above the extremity there, the monthly support, the lower end of the cluster at 11.1. So you could start to carve out like a, Donald Cope type of argument where S&P monthly support closed above, Nasdaq held monthly support, BTC weekly 20k roughly around there support, ETH closed above slash at monthly support as well. Does that factor into your reasoning at all? The fact that at least the equity indices on a high time frame closing basis, not the best monthly levels, whatever, but they didn't completely shit the bed. Does that matter to you at all?
It does. It's like I hate that it does, but it does. Yeah, it's a big reason why. Like I saw those kind of levels. I'm like, okay, I think that they're gonna hold. So I'm gonna bid crypto, which fucking sucks because, like you said, I mean, I've been, and we've both been because we trade very, or like we analyze the market very similarly in regards to levels, right? We've been very, very accurate on the S&P and Nasdaq front, right? Basically the entire way down. And I've been taking trades based off of the S&P the entire way down. And what has happened basically is like I buy Bitcoin at S&P weekly support. The S&P bounces 10%, or it feels like 10%. It's not quite 10%, probably. Let me check. Yeah, it's pretty much 10%. Runs into resistance and Bitcoin doesn't fucking move. And I have to close my Bitcoin position break even because I'm like, okay, now the S&P is at resistance, so I don't want to be in the trade anymore, right? And then Bitcoin nuked. And I've done that over and over and over again. It's starting to get really fucking annoying. So, so I want it to end because, I mean, if you look at the last weekly candle, right, when I entered my position in crypto, that was basically the bottom of the S&P. And my like good part of my reasoning was that I thought that the S&P was gonna be bottoming. And then the S&P rallied 7% in crypto, and especially Bitcoin didn't do shit, right? Some altcoins kind of followed through, and I mean that's nice to see, but Bitcoin didn't do shit. And so yeah, I factor that in, and I think we are at monthly support on the S&P, so I think that's like due for like a high time frame bounce. I just hope that this time around crypto can actually follow through with it. And I hope that I'm not wrong this time, because I mean I've been right um, on the S&P front for a while now. If I'm wrong this time around, where I'm just like, okay, I'm going to stick with my position, that suck, because if the S&P breaks the support, there's a good chance that crypto goes along with it. So yeah.
The one time you capitulate and choose to trade the S&P is when it'll like go down 30% or decouple or do something crazy. So unfortunately,
Yep.
you're stuck in correlation purgatory where you have to keep trading like the synthetic S&P minus all the upside. So that's fun.
And me.
No, I know it's not great. I think that's plenty for market stuff. We can do a speed run of news. People have been glued to news anyway, I'm sure. And we have probably not a ton of extra info to add. It's the same old thing that macro still sucks, right? Like the economy sucks, inflation is high. The whole premise of a soft landing is basically raise rates enough for inflation to come down, but not that high to trigger a recession, right? I guess that's the one sentence, one line summary. And that's a historically very difficult slash impossible job. And that's got the central banks trapped between a rock and a hard place, where in terms of their mandate, it's, price inflation, price stability and employment for the most part tends to be the mandate. But obviously, it's still, whether we like it or not, a very political institution, or at least one that's adjacent to politics. So overcorrecting and sending the economy into a recession, at least a formal one. I know there's some arguments that we're already in one, which is fine, but like a formal recession to fight off inflation. I mean, there are no good choices to be made here, right?
Yes.
That's kind of the macro stuff in a nutshell. That's the tension, that's the difficulty, and that, all the usual spillover stuff applies as well. If the economy sucks, people aren't going to have the money to go speculate on crypto Ponzi coins, and especially when crypto Ponzi coins have completely blown up and now carry like an extra, I guess, reputational risk from the institutional side, yada yada, same old. And the second main, I guess, news-driven factor is just crypto contagion. We continue to get headlines basically every day, every week about centralized exchange or lender being acquired for pennies on the dollar, more distressed lenders, exchanges not resuming withdrawals when they say they should, and that type of stuff. All part of one, as we've coined it, correlated basket of shit. As far as the news goes, first one I've got here, we can speedrun these, honestly. It's not like super interesting. Grayscale, Bitcoin Trust, rejected, the spot ETF we were supposed to get,
Yes.
but nobody who's actually smart or serious thought we were going to get it, at least from the Bloomberg analytics guys. Surprise, surprise, no spot ETF. Grayscale said they're going to sue the SEC. Great. I don't know exactly what's that supposed to achieve, and if it does, even if it does achieve something, it's gonna be months and months down the line. It's not like some immediate resolution where they sue and the SEC is like, oh, just kidding, have your ETF, it's fine. Don't sue us, please. It's nothing like that. Maybe this is good. For two reasons. One is that it doesn't appear from the price action that the market cared too much or was expecting an approval. You and I traded, I think it was the 2018 VanEck ETF or 2019 rejection, which sent the market from like 7.8 to 6. Do you remember that move?
Yeah,
Or like
good
from
times.
8 to 6 or something. So at that point, clearly that was like a thing that the market was built on or expressing views about. And, when that didn't get approved, far less sophisticated back then or whatever, but that completely created the market. On this occasion, it appears that the expectations weren't super positive or high, or no one was really caught off guard by this move. And maybe this is something that we store in the back pocket as for future bull market catalysts. And the SEC's reasoning has been, I don't love it. I think it's a very fine margin to approve a futures-based ETF when those futures get their Bitcoin price information from spot exchanges and then not approve a spot-based ETF, right?
Yeah.
I don't know. That kind of rubs me the wrong way. And it's all the usual reasoning as well about TLDR, exchanges not willing to sign up to register with the SEC to undergo the same type of, I guess, transparency measures and adhere with transparency regulations that they'd like. And they also just talked a lot of stuff about price manipulation, stable coins, yada yada. But this doesn't look like it's coming anytime soon. Thankfully, it doesn't look like anyone thought it was coming anytime soon. So the market didn't go to zero on that news. What do you think of this?
Yeah, I think you kind of summed it up perfectly. I don't think anyone really expected it to. It'd be really nice if it did, especially for, I guess, like Grayscale, like Bitcoin holders. Fucking hell, that is so brutal. Just
Yeah, do
looking
you want to
at
give
that
us like a? Do
chart.
you want to give us like a 2 minute? Sorry, my voice is cracking. It's over. Do you want to give us like a 2 minute kind of what is GBTC? Why is there a need for a
Oof.
grayscale
I mean,
ETF type of thing? Like, what is going on? Because some people might look at GBTC, the ticker, and say, "Oh my God, look, BTC is so cheap. Why can't I just buy that thing and then sell physical and arb that? Or why does that discount exist? Why does it
yeah.
suck? Do you have like a quick
I mean,
overview as to what the hell is going on with this like 10K Bitcoin or whatever the price is at this point?"
yeah, it's like around 14K, 13K ish. And the reason why it's like trading at this kind of discount is because you cannot redeem it, right? So you can buy Grayscale, like Bitcoin, GBTC basically, and you're gonna be able to buy it cheaper than Bitcoin, much cheaper actually. But the problem is you cannot go to them and be like, okay, now I would like to have a Bitcoin. That doesn't work. And I mean, they they say they would like to have that. Obviously, the reason why it doesn't work is because it's not getting approved, right? So they cannot redeem it, and so you're kind of stuck in this position where you bought this shit and you cannot redeem it. So the discount that you have from like GPTC isn't really like the only way to narrow it down is by people buying a bunch of GPTC. Which people haven't been willing to, right? So it's been like we've had a bunch of premium on this, like on the GPTC trade. So that means like you had GPTC trade above Bitcoin for quite a while because it was like an easy way to get exposure. And then a bunch of people, including Free Arrows Capital, kind of got into the game. Were like, okay, this shit's free money, and they kind of like try to get in big time, and yeah, then then the premium basically went negative, which means just that Grayscale is trading below Bitcoin price. And then you obviously have a bunch of people completely panicked, right? Because they're like, okay, I cannot redeem this, so I cannot go to the fund and be like, okay, I want my Bitcoin. The only thing that I can do is sell and like sell the GPTC back, but you can only do that, I think, like after 6 months or something. That part I don't quite know for sure. I don't want to say anything wrong. But so it's kind of like this market. It's kind of like altcoins on Bitcoin, where it's like when Bitcoin goes to shit or goes lower, GBTC people are going to freak out more because it's much more illiquid, and you cannot really like the negative premium can go wider and wider. And this is essentially like one of the big reasons why free AC blew out, right? Because on the surface level, this is like a free trade. You buy this, and at some point, like the Grayscale fund gets converted into like you can actually redeem it if they ever get through the SEC, basically. Um, the problem is you have to pay, I think it's 2% per year in management fees if you hold GBTC. So you're basically bleeding 2% every year. And the longer this takes, the more money you bleed, right? So, like, imagine you buy Bitcoin and this takes 50 years, you have zero left, or like not zero, because I mean, it's obviously from your next year's balance. So it goes like lower and lower and lower. It's not zero, but yeah. So you kind of lose money every year. And people just don't seem to have the trust that this is going to be like that you will be able to redeem it at any point in time. um, and obviously, like I said, it's illiquid. It's like a bunch of people that tried to make the ARP play got basically completely wrecked by the market. I know for a fact that Free Hours Capital had a bunch of money in that play, and
BlockFi as well. All right, that
yeah,
was a big part of their
BlockFi.
yield.
Yeah, exactly. So like a bunch of people had a bunch of money in it that got completely wrecked, which makes the negative premium go like grow wider and wider, obviously. And then people are freaking out. They're like, holy shit, like what is this? And they start selling as well. People panic. But yeah, I think it's actually like at a level where it's reasonable. I think it's like discounted by like what 30% ish, where it's reasonable to kind of take a stab at it, because it's not, in my opinion, it's not going to zero. That doesn't really make any sense. And the 2% management fees, like if you have 30% discount, right? Those 2% are going to carry you a long way, right? So you can hold it for like a couple of years. The only question is, can you get it cheap or not? So can you get it at like 50% discount or not? And I think at this point, like it's getting quite excessive. So I think at this point, it actually makes sense. But yeah, this shit is like way over my head. I'm really not qualified to talk about it.
No, I think you did a good job, but like I agree with you. I'm no expert either, but like mechanistically, arbitrage is the mechanism by which the same instrument holds more or less the same price everywhere, right? So the basic
Yes.
premise of arbitrage is if you buy the same thing in one venue and it's being sold for this, the same thing is being sold for a higher price in another venue, you buy it cheaper at venue A and you sell it for a more expensive price at venue B, right? Even if it's marginally more expensive. And the difference between venue A and venue B are your profits, right? Minus any fees or
Yes.
whatever else. Now, the thing is, there is no arbitrage mechanism for GBTC in its current form. It's like a closed-ended fund type of thing. It's a closed loop. So there's no kind of redemption mechanism. There's no arbitrage mechanism by which it would fall, unless it gets converted to an ETF or GBTC gets bid up or whatever, there's no reason for it to trade at Bitcoin's price. It was a
Yes.
very attractive source for yield in the bull market because it was trading at a premium, right? So you could, I think, give them physical spot BTC, and then you would get
Yes.
back whatever the price of BTC plus the premium, correct? And that difference was the free money. Now there's no free money and there's no arbitrage because there's no redemption mechanism. I think that's broadly correct.
I think so too, but I don't want to put my hand in the fire for it. But yeah, the problem with it is basically a bunch of people are like, those 2% they heard, and that means the fund is basically bleeding money year over year, and there's panic everywhere. So there's panic there as well. And you had like the big parties that played it all got wrecked, right? Which, I mean, I think is an interesting situation to be in, because I mean, like I said, I don't think GPTC is going to zero. I don't really see a reason for it, right? So at some point, it makes sense to just buy it. And I think that point is basically this kind of level, right? So like you can buy Bitcoin 30% cheaper if you have a shitload of Bitcoin, right? Let's say you're like a bigger holder of Bitcoin. And I mean, I don't want to make people ape into like the next BlockFi or whatever, but I don't like this going to zero is like this. I don't really see the chance for it. But so if you're like a big Bitcoin holder, right, and you have a bunch of Bitcoin, and I've actually been considering this with my Bitcoin holdings as well. The only reason why I haven't done it is because I want to be liquid right now. But what you can basically do is you sell your Bitcoin and you buy a bunch of GPTC. You get it at like 30% discount, and then you just bet on that in 10 years, at least in 10 years, probably earlier, they're either going to close down the fund because it's going to be too embarrassing, which, I mean, honestly, slim chance of them doing it because it's free money every year, or something gets approved, and then you basically make that difference in one go. Problem is obviously that if the ETF never gets approved and you just kind of sit there and the premium doesn't close down at all and people just kind of lose the trust in it, then you're kind of stuck in a position where the longer you wait, you just lose percent after percent after percent in management fees. So like that's where the trouble comes in. But I think at this point, it makes sense to at least buy it up a little. It's not something I would want to go all in, but if I get my Bitcoin bounce, my altcoin bounce, what I'm going to do is like I'm going to take profit into like a level that I like, and then I'm going to convert some of the gains that I might or might not make on those trades into like a long-term Bitcoin position that I'm going to express on GPTC. But it's obviously a little bit more risky. Like I said, the liquidity situation is not nice. The management fees are really shit, and it doesn't really seem like anyone wants, or especially the SEC doesn't really want to have like an ETF, a spot ETF. So doesn't really have to get approved anytime soon. So it's a risky play, but I think at like 30% discount, it's one that makes sense.
Yeah, Solana, Litecoin, Dogecoin went enough for you, Don. You need GBTC as well to complete the holdings. The rest of the news is a bit of a meme, to be honest. One of them is that Wonderland passes vote to invest 25 mil in Sifu Vision. So the whole
What?
meme of tokens are with Sifu is real.
Hmm.
We've manifested that into reality. I mean, for 25 mil, why don't you just buy BlockFi instead, right? Like, but yeah, this is like a classic crypto thing. There's a whole history there with Wonderland, Magic Internet Money, Sifu, Quadriga, etc., which we've covered before and not worth going into again. But it's shocking to whom the space is willing to give money over and over and over again, despite an abundance of evidence suggested that they might not be entirely credible across the span of their career or the best custodian of funds. That's me being very charitable. So that's a bit of a meme. The only counter argument I've seen is that there was no mismanagement of like the Wonderland treasury. So this time it's different. He's like a good guy now. But like,
Uh,
come on, people. Out of all the people, out of all the projects where you wish to divert your money or treasury allocation decisions, if that's the best you can do, God help us all, I suppose. Although it's still probably better than 3AC treasury management, I guess. So
low blow.
there are no good choices in this market. And on that note, Deribit initiated 3 Arrows capital liquidation application in BVI court. I bet the BVI court is pretty fucking busy with that type of stuff at the moment. This is just more kind of classic post liquidation, wind down, administration, yada yada type of headlines. Because so much of this borrowing was done by OTC desks and personal relationships and not on chain and not collateralized or marginally collateralized, etc. Apparently, Voyager's entire loan was uncollateralized, like hundreds of millions to 3AC uncollateralized, just absolutely
Yeah,
insane, right?
absolutely mental.
Just mad, but more of those types of headlines. But for those reasons, of we just don't know the terms of the agreements and the deals and how much money was lent out, etc., because it's all opaque and not on chain, it becomes very hard to quantify the actual supply overhang that exists and will continue to exist in the market. I think we've seen a ton of really urgent selling. And obviously, once the news has come out, that would suggest that like the biggest bits of the, selling the collateral have been complete. But it's just as we said in technical roundup, a very murky, muddy, shitty picture as far as crypto contagion goes.
Yeah, I agree. It's actually kind of crazy that like most of the, and I mean, this is not 100% like proven, whatever, but I'm decently certain that it's true. But most of the liquidation that has been happening from like the whole free AC wind down and like the liquidation events that we've had has been like between 30 and 20K, right? Which is kind of crazy to me, right? These kind of size positions between 30 and 20K, I would have expected it to go quite lower, honestly, with the numbers that we're talking about. Like even the immediate fallout, just like the more numbers we get, the more I'm like, holy fuck, this is kind of crazy. Like I'm surprised that the market just moved like 5, 6K and that's it. Obviously, we had like another move down towards like 17K. But still, I would have expected more. I'm actually quite surprised by the strength on that front. Obviously, we don't really have much other strength other than like the entire market, like pretty much the bigger guys all got wrecked, and the price is still at 20K, which I think is a positive. The negative is obviously the S&P is moving and we're not, which is just like, yeah, it seems that that's like the bad side of the okay strength, the relative strength, and then the good side of the relative strength is okay, everything imploded and we're still kind of hanging on.
Thing is, you and I spoke about Bitcoin's identity months and months and months ago last year as to do you think it's an inflation hedge? Do you think it's this, that, the other? And I used to think it was a very uncontroversial position where we would assert that all the evidence suggests that Bitcoin is a risk asset until proven otherwise, right? It's
Yeah.
a conduit for speculation. Maybe in the future, as the market cap goes up and volatility goes down, takes more of gold like properties and plays that part in the micro portfolio. But I honestly am not, just you and I talking. I felt like I was going through the motions when I was making that argument. I was like, look, it's just fucking obvious, just like a gambling thing, right? Stop saying it's more
Yep.
than that. It's not any of this other magical stuff. It could be. It's got properties to be that type of stuff, but it isn't. And I thought that was a super obvious thing. And only in the last 2-3 months of macro weakness have people really come around to that type of argument. Like, oh, wait, maybe it is just kind of levered beta or, a extra bit to add on to the Nasdaq or whatever else. I used to think that was really obvious. I was wrong. I thought, if you look at how shocked some people are by how crypto and Bitcoin and whatever else have behaved in these market conditions, apparently that wasn't a consensus view as to what crypto would do when money contracts, essentially, which is quite shocking. But it's good because it means when everyone's down to speculate and the good times are rolling, we get to do well in crypto. But obviously, that comes with a cost, right? Then when speculation is the first out the window, so are we, effectively.
Yep.
No, I mean, I've got 3 other headlines, not super interesting. Bukele is buying more BTC. He bought 80 coins at 19K. All the big public buyers are very much underwater. Sailor, Elon, Square or Jack's thing, El Salvador, whatever else.
Me next.
Donald, the biggest of them all. They don't
No,
like these
sadly not.
prices, which is fair enough. CoinFlex cancels withdrawals resumption plan. Apparently, Roger Ver owes them a ton of money. He says they owe him money. Usual shit show. It's insane how an entire centralized exchange can get taken down by Roger Ver's presumably margin BCH calls or BCH
Yeah.
positions,
That is fucking hilarious.
which is
Not gonna
hilarious.
lie.
But yeah, more kind of absurdity and just shows how fragile a lot of these systems were and how reliant they were on the easy money, easy credit, easy loans up only. Because God forbid that stops happening. These things don't just like lower their interest rates, right? They collapse. It's like, oh, market conditions have changed. We've lowered our yield product interest rates. I'm totally fine with that, right? I would expect that, if anything, to reflect underlying market conditions. But instead, we went from here's your yield on your coins and we're a centralized exchange, everything's working, to, oh, by the way, we have no money left. That's insane. And
Yeah.
again, speaks to the fragility of the space. And the final note, and I want to get your opinion on this, or on the whole thing, on crypto fragility, whatever else. FTX seeks to acquire troubled crypto lender BlockFi. I'm hearing 25 mil thrown around, which is a bit of a downgrade from their 1 billion, I think, most
Yes.
recent round. And
1 billion.
that in itself was a down round, wasn't it? It's just unbelievable,
Yeah.
the magnitude of this wipeout. Although this is what should happen, right? Let's be clear. When you have equity and you're distressed and you get wiped out and your customers need to be made whole, that shit comes first, not your equity. Your equity is the gamble portion of it, right? So you
Yes,
should
I agree.
expect to get wiped out when it comes to deciding between paying your customers and adhering to those agreements versus protecting your equity. You made a bet, it went wrong. The priority should be the customers. But again, it just speaks to the fragility of the space. BlockFi got rocked when the GBTC trade ran out, but the market itself was bullish enough to absorb that. I think they raised another round within like a week or something ridiculous, and they patched up that hole. And now with the crypto credit crunch, far less people willing to plug that hole unless it's pennies on the dollar. That's what we're seeing right now, and it's actually a very common theme. Like in the bull market, exchanges get hacked. Celsius loses money gambling on DeFi. GBTC trade runs out. All of those things are equally terrible. As they are now, but the difference is when the market's up only and everyone's got money, they can just raise more money and plug the hole, and the industry keeps ticking along. Not in these conditions, and we're seeing a lot of that come to the surface. The body's floating to the surface now.
Yeah, I've seen someone argue on Twitter, and I felt like that was like a reasonable argument to make, that like all these bailouts that Sam is doing, they're not really worth it. They're more so to kind of appease the lawmakers in the US, because all of these are US companies, right? Um, so as far as I understand, anyway, like that's the argument that he made, to kind of like get on the good side of regulation a little bit, which I mean, I guess makes sense. Honestly, like all of these, like all of these kind of companies probably deserve to go broke, and it's good that they're gone. As bad as that sounds, because if you kind of practice the way that they've been practicing, it's just a matter of time, right? And you don't want to have them get too big And I feel like they've already gotten too big. It's the same with Luna, really. And we've talked about this when Luna happened, right? Where I was like, I'm glad it happened now, because what would have happened in like a year or two when the market is like much bigger, it would have just been much, much worse. And then there's no coming back, right? And it's the same deal here. We're kind of shaking out the weak and the shitty practicing kind of companies. And I mean, DeFi did surprisingly well, right? And the centralized, like the CeFi world, just completely shit the bed. Because, I mean, just talking about Voyager again, right? Just giving that much money to free AC uncollateralized is just completely mental to me. It's just completely crazy. And the practices that kind of got normalized in that space are just completely insane. And I feel like the reason, and I don't know, have you read the Arthur Hayes, the new article that he
Yes.
put out yesterday night? It's excellent. I can only recommend everyone to read it. Um, so I don't even want to make his case for him, basically, because I completely agree with what he said. You should just read it if you're interested in how all of this happened and why, because I think it's excellent.
Don, just to round up, when you and I were talking a few months ago about the Terra Luna thing, I think we made the claim that in crypto, if there's a chance that systemic risk gets exposed, it will get exposed. I don't think either of us expected
Yes.
neither the speed nor the magnitude with which it took place. But it's good to be here, good to be alive and kicking, and I guess valuable lessons to be learned all around. That's all from us. Sorry for my raspy voice, although I did enjoy being back and talking and, weekly open, Monday markets, all that kind of stuff will be going on ahead as usual, pending no further complications. That's all from me. That's all from us. Thank you once again to FTX for supporting the show and for bailing out the industry, I suppose. Obviously, the first one is far more important than the second, but I guess both are cool. Their links are in the description below. They support the show, so support them because they support us. Do all the normal YouTube stuff, like, subscribe, comment, smiley face, sad face, say Don Long again, lol, 2018 duck watching in disbelief as you get wrecked, something like that. All of that is very cool and welcome. I'm sure he doesn't get enough of that on Twitter, so he'll appreciate it very much. That's all from me. That's all from us. See you on... Wait, what day of the week is it? Monday. See you on Monday. Have an excellent weekend, and goodbye.
Bye bye.